You may have heard we are in a recession or on the brink of one.
We're in a recession, William.
Inflation is at a 40-year high.
Inflation is out of control.
Interest rates continue to rise.
Interest rates go up.
And gas prices are just downright ridiculous.
Gas prices are through the roof.
You've experienced quite the roller coaster ride in the stock market.
How about that stock market?
And even if you don't pay attention, your retirement account is significantly lower than it was a few months ago.
I thought I was contributing to a retirement account.
To top it off, your crypto accounts, if you have them, have been absolutely hammered.
Gamble your entire company on crypto.
So let's look at 7 ways you can financially prepare or position yourself in a recession. The first tip to protect yourself, whether a recession is coming or not, is to not be afraid of a bear market.
Market, bear market, you name the market, I'm there.
Recently, the S&P 500 index slid into a bear market, which is defined as a 20% drop from a recent high. Now, the average bear market since 1950 lasts about 418 days. Now, obviously, it can be more or less than that.
No one knows.
Honestly, if you're a long-term investor, this is, a great opportunity if you are willing to shift your view of what is actually happening.
You shift your point of view a little.
Focus on companies that have strong balance sheets, strong cash flow, and products that consumers are using and need. Anthony Saglabine, global market strategist for Ameriprise Financial, suggests.
You hear that?
Healthcare and consumer staples companies have often done well in recessionary environments because people need their products regardless of the economic conditions or environment.
Yeah, I need those.
Dollar cost averaging, which means you invest the same amount of money regularly regardless of the ups and downs of the market, is something that you may want to consider.
I'll consider that, Harvey.
Although stocks are getting beat up right now, historically, stocks have recovered very nicely after a recession. The second thing you can do to protect yourself in a recession is to not try to time the market.
I watch the stock market channel all the time.
Many people may want you to get out of the stock market or reduce what they're investing until things get better. It's near impossible to know the best time to be in or out of the market. Infamous investor Warren Buffett is a strong proponent of this.
Been the biggest proponent of.
After the lowest part of the bear market, historically the S&P 500 has tended to rise above average prices.
Back into the ball game.
If you're properly diversified with your investments, weather the storm, it will get better. The worst thing you could do is selling out at the bottom. Another thing you should consider to protect yourself in a recession is to get rid of your credit card debt, and do it now.
Do it.
According to Matt Schultz, chief credit analyst at LendingTree, when a recession may be on the way and interest rates are rising rapidly, it's even more important to do this. Now, there are a few options for this, but one of the best options is to get a low interest personal loan or sign up for a balance transfer credit card.
Credit card.
You can climb out of debt a lot faster if you transfer high interest debt to a credit card with 0%.
0% interest. Money's cheap.
Obviously, this isn't for everyone, so if you can't qualify for that, call your current credit issuer and ask for an interest rate reduction.
How much reduction?
20%.
Schultz, who we mentioned earlier, states about 70% of people who asked for one in the last year got one. Far too few people ask. The next thing you can do to position yourself in a recession is to stockpile savings.
Exclusive access to a stockpile.
It's so important because a recession can really quickly change your financial situation.
What is your financial situation?
If you don't have a solid emergency fund set aside, it may be important to consider canceling a typical vacation or that renovation you were wanting to do.
Wait.
You don't want to have to resort to debt if you lose your job or because your wages aren't keeping up with the historically high inflation.
Unbelievable.
A typical emergency fund has about 3 to 6 months of expenses saved and is easily accessible for when and if life happens. Now, our fifth tip piggybacks stockpiling cash and is even more of a security blanket.
It will keep me safe.
Establish a backup to your emergency fund. Remember, life can happen.
What always happens? Life.
Maybe it's a loss of a job and you're finding yourself in a pinch.
Ouch! Boy, that hurts.
A home equity line of credit can make sense in this context, and it's best to obtain it when you're employed and most likely to qualify. This is something Christine Bentz, Director of Personal Finance for Morningstar, suggests. Moving on to our sixth tip, don't underestimate the power of having bonds in your retirement portfolio.
Bonds.
In previous recessions, bonds have held up better than nearly any other market segment. They're an essential portfolio ingredient, especially for people who are in or getting close to retirement. Now, more specifically, look at the government-issued Series I bond with a current annualized rate of 9.62%.
Very impressive.
Backed by the US government, the bond doesn't lose value. Its variable rate is set every May and November. You can only buy them directly on the US Department of the Treasury website at treasurydirect.gov. Available amounts start at $25 and you can invest as much as $10,000 each year, although there are some exceptions. Finally, let's get into our last tip for protecting yourself in a recession, which is to get a side gig or side hustle.
Kind of side hustle.
Now, if you know me or not, this is something I try to do, recession or no recession.
Anytime.
Even if you don't need the money right now, it may be a good time to get a second job or find work in the gig economy to boost your income and savings.
Make more money for us.
Now's the time to prepare for the worst and hope for the best.
I like that.
Side hustles come in all shapes and sizes, so get out there, and make it happen. Let's take a second and review the 7 tips to protect yourself when a recession occurs. Do you agree with all of these? Do you think we left some off the list? I'd love to hear what you guys think.
What do you think?
Leave us a comment below and we can continue the conversation about protecting your finances in a recession.
Recession is killing us.
Thanks so much for checking out our channel.
Thanks.
If you want to be part of the Modest Wallet community, please don't forget to subscribe to our channel.
I subscribe to that.
It costs you nothing and really helps us out as we continue to bring you Money Made Simple videos. Like and share this video with others, and I'll see you in the next video.